We'll see how this works. Going live. I guess we're live, huh? Can you guys see that?
Let me check your profile on Twitter. That'll be the quickest way.
It says I'm live on Twitter.
15 seconds in, we're live.
We are live. Absolutely.
Premium profile. Yep. Bingo. Look at that.
This is exactly how it works with Riverside, so that's perfect.
Wow, cool. All right. And can you guys see the chat? Let's see if I can pull the chat up. That's private chat.
I can see it on my screen.
You guys can see the chat on your screen?
Yeah, Tom Anderson's here. Hey, Tom.
Cool.
I don't see a chat, but oh, there it is.
All right. Well, oh, there it is. Chat.
We're working this out, guys.
Bingo. There it is. Look at that. Okay. Whoa. Actually, yeah, there's a lot of people here. Oh, what's up, Tom?
Hello, everybody.
There we go. All right. We're cooking. There's some people here. All right.
Jeff,
oh, wow.
Bingo.
Jeff, do you want me to go through some of this boring stuff while we're waiting?
Yeah. Tim, if you don't mind kicking us off with the AI, not financial advice, that would be fantastic.
Hey, guys, I'm Tim Kotzman. Welcome to the True North series. This information that's provided in this content is for educational and informational purposes only and should not be considered as financial advice. The views and opinions expressed are those of the speaker and do not necessarily reflect the official policy or position of any organization.
Excellent. There we go. Now that we've got that off of the, now that that's behind us. Welcome, everybody. Thanks for joining us for MSTR MicroStrategy True North Episode 1. I think we've got pretty much everybody, with the exception of Ryan, who's just kind of notoriously late, I think. Excited to be here. I've got a little bit of whiskey I'm sipping on. I think everybody else got a couple of drinks. I don't know. We're having some fun. It's a Wednesday night. Got through some crappy work day, and here to talk about MicroStrategy. So we're gonna have a little bit of fun. Okay, so why are we here? Why are we having this conversation? What is MicroStrategy True North? And what I'd say to people, and I'm going to share my screen here because we will jump right into this. So, as many of you guys realize, the price of MicroStrategy has absolutely rocketed over the last couple of months. And over the last year, we've seen a tremendous rise in the market cap of MicroStrategy. Because of that, there are many catalysts on the horizon that are going to potentially cause a significant frenzy within the entire market, given the speed that information flows through, social media blowing things up. There's going to be massive bewilderment. There's going to be confusion. Many people that are going to review and learn about Bitcoin for the very first time are going to just instantly talk crap about Bitcoin and MicroStrategy. And there's going to be a ton of information out on the internet. And the whole goal of this is to provide a beacon of light with some of the investors that have spent thousands of hours of research on MicroStrategy and Bitcoin, and provide some consistent, strong information to help understand the trade and feel confident in the trade. So what I've shown on my screen here on the left-hand side, you can see this is subscribers of r/Wall Street Bets in 2020 before and after the GameStop run-up in 2021. So r/Wall Street Bets was roughly around 600,000 people in 2020. Oh, did we get Ryan? Did he click in? Maybe. r/Wall Street Bets was around 600,000 people in 2020, 2021. In that week in January in 21, r/Wall Street Bets went from 600,000 people to over 10 million people in about 2 weeks. That was a significant frenzy. There were, it was a classic short squeeze, and there were hedge funds on both sides of the trade that were running to Wall Street Bets, creating bots, fake profiles. FUD was flying around everywhere. And there was significant disruption and confusion within the market. So I think that a lot of people think that where we're at with MicroStrategy and where Bitcoin can potentially go and what the next 12 months look like for Bitcoin and MicroStrategy, we could see a similar type frenzy based on all the catalysts on the horizon that may thrust, our irresponsibly long MicroStrategy from 8,000 members to 800,000 members, and it can happen very quickly. Some of this stuff happens like wildfire. It can move really quickly. And what you'll see, and what I anticipate happening, is we're going to see many articles like the one that came out from the Motley Fool in the middle here today, where if you read this article, it's very clear that whoever wrote this article has not spent more than 10 minutes researching MicroStrategy beyond just the statistics that come out of Yahoo Finance. It was probably written by an intern. It was probably partly written by AI. So the purpose of this group is to kind of debunk some of this stuff over time and provide insights from the cutting edge of the MicroStrategy investor brains to the vast group of investors that are interested in this. So with that said, price of MicroStrategy today ended at $213.95. I think after hours went down a little bit, but we did see some strength in Bitcoin after hours. After trading hours, Bitcoin's up to 67,113. And yeah, here we go. Inaugural first video. So with that said, we've got a quick little agenda that we plan to go through. Our plan is to have this either weekly or every other week on Wednesdays. We are treating this like an investment club. We're going to have some fun. We're going to chat. We might bring on special guests every once in a while. And yeah, with that, we'll kick it off. We'll do quick intros. We'll pass it around to the group. We'll talk a little bit about Bitcoin first, and maybe get into some topics and see where it goes. So I'm Punter Jeff. For those that you don't know me, I have a background in traditional finance. I have expertise, thinking about game theory, working in finance, running analysis on options trades and things like that. So over the next 12 months, I will be continuing to work in game theory of this trade and future options perspectives. So with that, I'll kick it over maybe to Dan. You're the first one. You're right next to me.
Sure.
Quick
Hey
little intro.
guys. Hey guys, I'm Dan Hillary. I study electrical engineering. Over the next 12 months, I'm going to try to hang in there and make sure I don't mess this one up. I'm going to try to catch Jeff with these options trades and hopefully help out True North with some content. I know Tim's been doing just a fantastic job, and that most recent interview with all of you guys has been so good. So really excited.
Thanks, Dan. Maybe we'll pass it to you, Adrian.
Yes. Can everyone hear me clearly?
Absolutely.
Awesome. My name is Adrian Morris. I work in information technology, management consulting, and a little bit of freelance AI work. Over the next 12 months, I'm going to make lots of money with the rest of us here. I talk with a lot of you guys on a daily basis. I know that we all have a similar mindset. I want to make sure that we do serve as a true north, as a source of truth for MicroStrategy. And I agree with Jeff that there's going to be a lot of fanfare because everyone's waiting for alt season. I think it's going to be MicroStrategy season. So I'm pretty excited about what 2025 will bring.
Excellent. Thanks, Adrian. We'll pass it to you, Grain. The
Hey, folks.
Power of the group.
Thanks, guys. I really appreciate being on this. As I've said before, my undergraduate degree is in economics, which was basically a useless degree when I got it in 1990. Became a tech guy here in California, retired from that, and now I work full-time on managing my portfolio. These are the guys I listen to. So people, if I have questions, I go to these people, and that's what True North is about. When this crazy run-up continues, this is the group you want to come to on Wednesdays to ask questions. We'll answer that. And thank you for putting this together, Jeff. I really appreciate it.
Yeah, absolutely. Thanks, Grain. Over to you, Soleil Nitu.
Hey, my name is Soleil, and I am the option seller that Sailor warned you about. I tried to I taught myself options after a short career in the Navy, and I try to show all of those strategies on my daily videos and try to do strategic short positions and then use those profits to go as long MicroStrategy as possible. Thanks.
Bingo. There he is. The seller, the option seller. What a unique perspective. Thanks. Over to you, Ben, the working man.
Yeah, first I'll just say that I think for Ryan's entrance, if we don't get some WWE style music when he joins us late and comes crashing into the party, I think we're missing a serious opportunity here. So maybe we could figure out how to work that out as he breaks through the screen, but we'll figure that part out later. But I'm Ben Workman. For any of those that I haven't probably interacted with, I spend entirely too much time on X and Twitter, so I've probably interacted with a lot of you guys out there. But most recently, I was on the biggest show in Bitcoin, which is the Tim Kotzman show. So that was the most recent thing that I was working on. But over the next 12 months or so, there's quite a few things to work on. One, we're never going to stop digging into MicroStrategy. I think at this stage we're all kind of hooked and obsessed. If you haven't picked up on that yet, so I think we're definitely going to keep going down that thread. But I do a lot of other stuff with algorithmic trading and some other things on the side. But for the time, I think we got some of the most exciting months of the next decade coming up for the people that are here for this ride with us. So I'm really excited for how this is all going to shake out.
Yeah, excellent. Thanks, Ben. Your long form posts are chef's kiss. Boom. Over to you, Tim Kotzman.
Ooh, Tim Kotzman. By day, I run a private equity firm, sometimes allocate to venture deals. But for whatever reason, all right, a story for another time, on October 9th, which ironically is 2 weeks ago today, I put an orange tie on and started talking to people. Quite the adventure since then. So over the next 12 months, my view is that there's a space between doom and gloom and going to the moon. And if we can kind of shine a light on that space and yes, through stories, which is the universal language, but also through analysis, then I think that's where we can bring the most value to the community. I mean, we know Bitcoin's the most important story and technology of our time. And now MicroStrategy is and will become even more the most important corporate story in the history of finance. So to the extent that we can provide signal through education and analysis, we can certainly help move adoption of Bitcoin forward, which is just the most important thing that I can spend my time on. So feel very fortunate to be here. And I literally had dinner 2 blocks over tonight with a guy who sold, his claim to fame is he sold the largest silver mine in the world in Argentina. And he said, Tim, you should buy silver because the ratio of the price action of silver versus gold is 10-1. I said, well, that's great. What's the ratio of the price action of gold versus Bitcoin? And he paused and he said, I don't really know the answer to that. So the point is we're early.
Oh my God, the magnitude. Dude, what was his facial reaction when you said that? Sorry to interrupt. What was his face like when you said that?
A story for another time, but to just hand it over to the next guy, we're in the right, everyone on this call is here at the right time, in the right place, and definitely with the right people. So I'm just super excited and very grateful to be here.
Yeah. Thanks, Tim. Yeah. I mean, I'm going to double tap that. I mean, this is the most exciting story in all of Wall Street right now, and probably of our lifetimes. No company has ever done this before, and there's no other correlation or historical precedent. So we're at the cutting edge, the bleeding edge, and it's a ton of fun. So keep interviewing people. Yeah. You're on a roll. Keep it rolling.
Yeah. If anyone has suggestions for guests, feel free to reach out to me.
Throw them in the chat. Reach out to Tim. Yeah.
Yep.
Cool. Bingo. Over to Dylan LeClaire, our head of Asian markets, MetaPlanet, and the Bitcoin and MicroStrategy extraordinaire.
What's up, guys? Happy to be here. To be honest, I've compared to everyone in everyone here in the video call. My analysis has been slacking. But no, I love the signal. This sort of this sort of talk and activity around MicroStrategy didn't exist last cycle. I mean, it wasn't even the same story, right? Like that didn't have open-ended ATMs and the converts and just like, it was a different story. It was a different time. There was no institutional acceptance. And so, yeah, I sort of agree that this next 12 to 18 months is going to be insane, but I don't think it even ends. It's obviously not going to end there. It's just going to become more entrenched. So this is an awesome signal. I mean, everybody here is going to make a hell of a lot of money. I mean, half you guys have like 50x just options, just unrealized headed into all this. It's insane. So no, I'm pumped. This is great. I'm going to be kind of half working Japanese hours during this, but yeah, pumped to be here.
Yeah, we're excited to hear some of the depth of some of these markets that you're working with as well. If you're able to share, to the extent you're able to share, and how these conversations kind of go from the inside out. You're at the table, so they're not the same as the MicroStrategy table. The scale is a bit different, but the conversations and the structuring, I'm sure, is very similar. So excited to have you. Thanks for joining. Last but not least, Ryan Ryquant on Twitter X. Let's see if his audio works.
Hello, sir. Can you hear me?
There he is. Welcome.
Yay!
The man, the myth, the legend.
Right. Listen, my name is Ryan. You might have heard of me from Quant Bros. Maybe you've heard of it. Like in The Simpsons, where there's that guy who's like, you might have heard of me from these things that you've actually never heard of. I do Quant Bros with Jeff. I'm in this trade heavy like you would not believe. And the two quick points I want to make here. Number one, I feel like I only work for two groups of people. That's my nieces and nephews. They're between the ages of 0 and 7 right now. My youngest is like 7 months years old. The oldest is 7 years old. And the second group that I work for is this group on the call, but also all the people in the audience. And the main thing that I just want to say about that is that, and me and Jeff have talked about this privately offline, but I feel like I've lived a life of mediocrity almost my whole life. I was an average student in high school, average, mediocre, athlete in high school. I was an above average athlete in like the Army in terms of like endurance athlete and like trying to go to Ranger school and like blah, 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 all that crap. But never in my life have I got to like pick an elite team of members to work with. And I've been looking for 5 long years now, trying to convince all my favorite like STEM friends from high school, dudes who were in chemical engineering, mechanical engineering, software engineering. I was like begging them, let's start a hedge fund. Let's go into business together. Who cares? Like, we'll figure it out, blah, blah, blah. This is that group of folks. And I'm beyond honored to just be able to participate and work with them. And even though I show up late, my brand is fun. And that's the same thing with my nieces and nephews. Even though I'm going to show up late to every family event with my sisters who have the kids, my brand is fun. When you have me, you have me. I'm not on my phone. I'm not multitasking, blah, blah, blah. I respect the hustle of people who have to multitask. I love all you guys, all the guys and gals in the audience. Thank you for being here. My name's Ryan. I'm ready to go to work.
Bingo. There it is. All right. So that's the crew. All right, we've got a few more. There, we're capped out at 10 people on a restream, but there are a couple more, and from week to week there may be a couple, 3 or 4 people, 5 or 6 people. Grain of Salt, he threw his helmet on. What a savage! Love so it. there will be various groups of people that will be on this call, and the purpose is to talk about MicroStrategy and what we're thinking about. So. With that, I think I'm going to start with jumping into just catalysts that are on the horizon. I tweeted about this yesterday, and I'm just going to share my screen to pull it up so we can talk about it. And we'll kind of just see where this goes. Maybe we'll talk a little bit about Bitcoin first. We'll talk about maybe the Sailor video a little bit, but I think this will get the conversation going. But so the next True North episode will be on Wednesday, October 30th, and that is the day of MicroStrategy Q3 earnings report. So we will have more information from MicroStrategy next Wednesday after the earnings report. I think it's going to be an exciting earnings call to sit in and listen to. And for any investor that is invested in MicroStrategy, you should be able to dial into the call. It should be available, and it'll likely be an hour after market closes. So 2 p.m. Pacific and 5 p.m. Eastern time, I believe. So that'll be exciting. And I mean, we've got a huge list of catalysts on the horizon, right? And we'll continue to update this over time. We've got the election coming up, November Fed meeting, MSCI quarterly review and rebalance, QQQ potential rank day and rebalance and inclusion in December, December Fed meeting, this historic open interest expiration in January, and quite a few other things, Russell re-rank day and S&P 500. So a lot of exciting things to look forward to over the next 6 months. And I think they will continue to get more exciting over the next 12 months as well. So I think with that, maybe we'll kick it over. There are a few people on this call that were at Bitcoin First. So it was myself, Grain of Salt, Tim Kotzman, and Ryan, which I think we might have lost Ryan in the meantime. Oh, and Dan Hillary. Dan was there as well. So maybe a quick overview of like Bitcoin First, like what people were talking about. Maybe Dan, I'll kick it over to you because you're the first one up there, and just chat through that.
Sure. Yeah. At first, it was a little bit not divided. I think everyone was excited to see the MSTR guys, and we were excited to see Doc Kruger and the gang. But there was definitely a subsection of people who were really excited about MSTR, and a subsection of people who were really excited about Bitcoin and the power law, and some intersection of the two. And what I thought was so interesting was how excited people were to hear about Ryan and Jeff's thesis around MSTR in person. Like there were a lot of traditional finance, allocate 5% of the portfolio to Bitcoin, kind of Fred Krueger style Bitcoiners who would sneak over during the MSTR session and try to get like a word in with Jeff and Ryan. Like, oh, is this thing really going to happen? What are those catalysts? Like, are those option screenshots real? So I was super excited for that. I'm super excited to be a part of that group at Bitcoin First.
Yeah, the general just level of investor there was also incredibly impressive. There were noobs, there were a couple of noobs and plebes, but also some very, very wealthy people that were sneaky in the MicroStrategy trade that were incredibly impressive, and much more impressive than the performance that I've shown on my Twitter feed. So the number of folks that are interested in MicroStrategy is interesting. But I will say it was only 25% of the group that was there. And of course, Doc Kruger hosted it during lunch. So you had to choose, like, do I want food or do I want to listen to these guys talk about MicroStrategy? And, that was a little weird. But, I'm not surprised at all. Maybe I'll kick it over to you. Grain, you have some general thoughts on Bitcoin First?
Look, I said this on Fred's call right after that. Look, it was the best event I went to in my whole professional career, for like the past 35 years. There were no PowerPoint presentations. People sat around there were these 4 big couches, and everybody stood around it, and we talked, and you were able to ask questions. So it wasn't one person presenting to an audience. It was incredibly interactive. What I can tell you is that a bunch of people flew out to meet me, which is very humbling. I think that's a pretty awesome thing for anybody to say. And obviously, they came to really see Ryan and Jeff. But throughout the day, 4 or 5 people came up to me, and they just said, "Your positioning is interesting, but I have the same amount as you in options, and I did it a year ago. I've got double what you have. I've got 4 times of what you had." Ryan was there. I got smacked down in the night before. This woman said to me, she goes, I said, "Yeah, my second holding is NVIDIA, and I'm up 698%. And she goes, "Yeah, well, you better put a 2 in the front to get to my numbers." And I'm like, "You're up 2,800. Ryan's cracking up. And she goes, yeah, I'm up 20. Yeah, I'm closer to up 3,000% on NVIDIA. And then she said, well, since you have a small position, mine's really large. And Ryan's just like dying. He just says, he goes, you realize that she just smacked down grain of salt? And I'm like, yes, I do. And she deserves she's awesome. And I'm just happy to sit there with other people. So it was a brilliant event. And if you guys can ever go to an event like that, I would highly suggest it. And it exceeded my expectations.
Incredibly professional, right? Incredibly professional. The unconference was really cool where, yeah, there was no format, right? Like everybody was just around little groups and chatting, which was very informal. And you got to chat to some very impressive people like astrophysicists, Caltech grads, like really impressive ex-CEOs of multiple companies, real estate people. Like the diversity of background was incredible. Bankers, insurance people, fund managers. It was incredible.
It was incredible. And I'll be brief. There was I talked to one person introduced. She said she was in public health. I'm like, oh, you're a PhD? She's like, no, I'm an MD. And then I was talking to a biologist. And by the way, when these people came up to me and said that they have more than me, it was not a flex. What it was them telling me how confident they are in their position now because they saw someone else like them. That's what it was. It wasn't about saying that they're better than me. And I'm so happy to see that. What they were saying was, wow, we've had somebody outspoken that publishes positions, and therefore I feel a lot better about what I did. And I'm like, damn, that's a lot of money you have at stake, right? So that's what it was. But anyway, continue.
Yeah, I mean, maybe over to you, Ryan. Any thoughts, takes?
The conference was one of the top 2 professional events of my entire life, without question. The only other thing that's up there is MSTR World from this year. I mean, and we've talked about this ad nauseum on Doc's Spaces recently, the past couple of days, how that 180 to 200 person group is by far the best because you can talk to everyone, right? But if I go, and I've never been to one of the big Bitcoin conferences, and maybe they're great, right? Maybe they're great, but I'm not talking to Dylan LeClaire for 10, 20 minutes at a Bitcoin conference. It's just not going to happen. It's going to be a lot of high buy at these types of events with so many people. These smaller things, to Jeff's point, we got to actually know these people: astrophysicists, TradFi people, real estate people, insurance people, all these different types of people. We actually got to talk with them, have a coffee, sit for 5, 10, 20 minutes each person. It was one of the coolest things I've ever done in my entire professional life. The only other thing that I can think of is MSTR World from this year. Which, by the way, imagine the vibe at MSTR World 2025.
That's gonna be crazy.
Hello, imagine that energy, and I'll end on that.
Tim, 60 seconds. Anything else to add?
Nothing to add. Punt.
Bingo. He's punting. All right, punting on. Back to punter Jeff. Okay. With that, I think the title of that conference, Bitcoin First. Right, like I think emphasizing that in this chat is important. I think everybody here would takes the perspective that having a thorough understanding of Bitcoin, understanding of money, doing an on-chain transaction, moving Bitcoin into cold storage, having a thorough understanding of the Bitcoin ecosphere, the technology, how it could potentially develop, is really critical in understanding the MicroStrategy trade. I think that's one of the most important components for understanding MicroStrategy and where it could go in the next 12 months. And I think this information asymmetry between Wall Street and this group of people on this call, and many of the people that are listening here, which is 3,700 of you, holy shit. So thanks for being here. And so yeah, yeah. Everybody on this call, on this video right here is I would consider us professionals in this trade. We have spent thousands of hours thinking about this, and at the knife's edge. So lead with that, Bitcoin first. And I think may make sense. We're just gonna kind of wing it and go from here, but I think it may make sense to maybe talk a little bit about the Saylor video that came out recently, which is drummed up quite a bit of I guess just chatter within the social media community. And thinking of Bitcoin as a transformer, thinking about how to store Bitcoin, whether it's custody or self custody or with an institution or whatever that may be. And it's interesting to see the infighting between Bitcoiners and non-Bitcoiners. So maybe I'll kick it over to you, Adrian. Maybe give a quick background on some of your thoughts on the video. If you had a chance to take a watch, if not, you could punt. That's fine. But
Yeah, no, I have had a chance to take a watch, and I want to look at it again to make sure I'm, assessing it correctly. But just at a very, very high level, I take it back to people thinking about Bitcoin as a peer-to-peer network, right? Those peers, they can be individuals, they can be state, they can be national, they can be banks, they can be institutions. They're different peers that can be players in the network, right? Saylor is speaking from the perspective of his peer group. And I think from my perspective, a lot of the comments that he has made have been taken out of context. Now, he tends to sometimes fly off the cuff with his comments a little bit, like crypto anarchists, for example. However, I've spoken to a lot of people over Twitter that will take that as a badge of honor. I would. I mean, if someone called me a crypto anarchist, I wouldn't exactly feel bad about it, right? So I think what he was doing was taking a dig at like FTX. He was taking a dig at all of those people that blew up last cycle that took the whole market down with them, right? And he was being very, very prescriptive, saying, well, do you want to hold your assets with Fidelity, or do you want to hold your assets with some offshore company with five dudes, right? I think he was definitely taking a dig at FTX there. And I think people got a little too caught up in his comments around self-custody because, even Hal Finney said that he envisioned a future rather, where we have banks that are doing the custodying of Bitcoin, and most of the transactions that are going on between Bitcoin peer-to-peer are not person-to-person, but they're institution-to-institution. So what Saylor is saying isn't exactly an antithesis to what the ethos of what Bitcoin is, right? I think he is just saying the quiet part out loud that a lot of OG Bitcoiners have an issue with, that institutions coming into the play have changed the dynamics. And just using the people in my life as a personal example, I always use my father, and I always use my brothers, and I always use extended family. My father's 80 years old, explaining UTXOs and wallets and all that stuff to that man has been a headache. However, he understands the ETF. And if I told him that BlackRock, Fidelity, whomever would custody his Bitcoin, he'd be far more inclined to be comfortable with that than he would be holding around his own USB stick, right? And a lot of people are just, I think, taking this out of hand a little bit because, well, one, engagement farmer is going to farm, and two, you have a reality where Saylor is not going to be walking around with his seed phrase in his head and a ledger or a cold card in his pocket. One, that's a horrible security risk because all someone has to do is swipe them up and they got access to billions of Bitcoin. And two, investors are not going to allow that. They're going to want a layer of security that exists beyond Michael Saylor being Giga Chad and a psycho with levels of focus that we can only imagine.
Yeah. I mean, like, can you imagine a board member saying, like, "Are you kidding me? You're gonna hold $16 billion in your brain? Like, no way.
No,
It's
they're not going
just
to do
like,
that.
It's just not gonna happen. Like,
And isn't that illegal?
What kind of risk management would that be? I mean, that was just totally insane.
But wouldn't that be illegal for someone in his position to do that, to actually just be self-custodying company assets by himself and be the only person to do it?
Yeah, I mean, I have no idea, but yeah, just the thought of holding $16 billion with one person is just like the worst risk management I literally could ever imagine.
But Adrian, you're so right when you said that he was talking to his peer groups, because people have delusions of grandeur if they think that he was talking to them. Like, and this is coming from, I was a paranoid anarchist before I was a paranoid crypto anarchist. So, the way I see that is people really, they had their revenge fantasy shattered, is what it was. So they thought, okay, I want society to collapse, all the governments to just come crashing down like the Berlin Wall. And then he just, took that fantasy away from them And I think that's what they were kind of hurt about, really, is they just had, their imaginations were running wild about, the way that they thought the world was going to go. And it's probably just going to go out with a whimper instead of a bang. And I think that's going to be preferable.
Yeah, I mean, like the likeliness of a transition, right? Like, corporations are going to exist even in a hyper Bitcoinized future. Like, how are you going to do any? Like, how do you get your iPhone, right? Like, people are going to have iPhones. Who's going to give you your iPhone, right? Unless it's just plugged into your head via Neuralink from Elon Musk. I mean, who knows? And
the other part, like, why would you capture coins that are already captured? Like BlackRock, you can either say that the government controls BlackRock or BlackRock controls the government, but those coins are already captured if you're investing with them. So, like, who are you going to do 6102? You're not going to 6102 them, and you can't 6102 the people who are self-custodying. So it just seems kind of I don't think it's a 0% chance, but it's not what the paranoid crypto anarchists should probably be too preoccupied about.
Yeah, and I don't want to take over the conversation because I just have a lot of thoughts about this. The 6102 argument has never made sense to me for a lot of reasons. Saylor brought up a lot of points that were rather salient. He said, one, the reason why 6102 went over so uniformly back when Roosevelt did it is because gold was the standard that was backing the dollar, right? We're not on a Bitcoin standard, so that's not yet, right? So that aspect of it is not necessarily a threat at the moment. Also, I still come back to the enforcement action of it. How are you going to enforce this? Okay, sure, you have BlackRock, you have Coinbase, you have all those institutional players that may go along with it, but on the flip side of that, will they? Like, really think about it. Are they just going to hand over billions of dollars to the government for the greater good or for whatever crisis that's coming along? I don't really see the use case for it. Even if the economy collapses, seizing Bitcoin is not going to do anything for that, because I'm going to say something that a lot of Bitcoiners hate. How do you buy Bitcoin? With fiat. If fiat collapses, where is the asset value for Bitcoin going to be held? It's still going to be held in fiat, obviously, right? We're still going to need to exchange it. We're still going to need to do things with it. It's still going to be denominated in an exchange rate to fiat. So if the market collapses and we have some kind of Armageddon level event, seizing Bitcoin is not going to do anything to stop that, unless they immediately switch over to a Bitcoin standard, which is going to make every nut job that has a ledger like me, or a cold card like me, or guys on this call that don't want to acquiesce, will become billionaires overnight, and everyone else is going to be living in the street. I don't know if that's practical either. So I just don't see it happening the way people think.
Well, I think if it was going to happen, right, I don't think that it would come out in the way people think a traditional 6102 would happen. If you're going to do it, I think the first thing you're going to do is you're going to call up a Jamie Dimon, if you're the US government, and you're going to say, hey, you know that $1.5 trillion in cash and short-term investments you've got? Well, there's this pesky company out here called MicroStrategy, and we want you to get them out of the way, right? Particularly MacroStrategy. You can leave MicroStrategy alone. And then they would cut some type of a deal to say, you go buy this company, you'll have these Bitcoin, you'll bring them in as assets. We'll free up the legislation where this can now become a part of your lending base. Now it's a working asset for you. You can incorporate it into the financial system. And how convenient. The way we have to get the money out the door as we're doing inflation is through loans. So what a better place to raise your lending power than through these mega financial institutions. So I think there's a lot of people that get scared by the 6102, but I think that we're in a slightly different age now where it becomes really difficult to do. I mean, not necessarily, I guess, if they went after a BlackRock or a MicroStrategy directly, but you've got to realize that the ramifications are much wider than that now. Yeah. And particularly if you've got all these other countries, we've got all the news coming out about BRICS and what they're trying to do with digital assets and trying to settle global trade using digital assets. I mean, it's becoming this global asset now, right? It's never been a U.S. asset, although those of us in the U.S. like to feel like it is, right? Just because our financial system runs a lot of the world having the reserve currency. But I think now they'd be more tactful than what we're kind of picturing in our head, where they just kick down the door at BlackRock headquarters and say, hey, Larry, your Bitcoin belong to us now. I don't think that's necessarily realistic for where we're at.
Hey, Dylan, I'm sure this conversation's come up with you guys, right? Like at MetaPlanet or the concept of custody, and can somebody steal it? Like, do you have some perspective on this?
Yeah, I mean, it's just, institutional custody is a reality of a public company at this point. I mean, unless you're like designing the infrastructure like a Coinbase. Yeah, I mean, people are hyperventilating, but like even like Saylor no longer technically has like 50% of the voting power. This is an enterprise, right? So how you can't just have a ledger like you guys are saying. I mean, there's a lot of liability. So custodians are fine. I think it's the optionality to withdraw or to move it. And Saylor said that, right?
Yeah.
It's the optionality to send it across the world in a split second. It's to see trouble at FTX and get out. And yeah, I mean, avoiding the clawbacks or whatever. But yeah, I think like where Bitcoin's maturing. The fact that big banks want custody. Some people, the cypherpunk types, anarchist types, of which like I would say there's a sliver of me there, right? Bitcoin, it's because it's becoming like hyper financialized as we speak. Like that doesn't invalidate the privacy bros or anybody that's working on the cutting edge of like the medium of exchange tech or like the site like cypherpunk ideals. But yeah, I mean, Saylor just is speaking at a language, or he's speaking a different tongue to the Bitcoiners of the past. Like if you adopted Bitcoin in the first 5 years of its release, or the first 8 years, like you were a special kind of like person to become intrigued with the magic software money. But now there's going to be trillions of dollars poured into this asset class, and there's the float's pretty small. So the fact that like there's a legitimate chance that MicroStrategy is like they say, and then it goes to $500 billion, $1 trillion. There's no reason it shouldn't be valued at the same, the same way that if a mega cap tech stock, Magnificent Seven company should. So yeah, I'm super bullish. It's cool to see a little bit of that world, but yeah, it's I mean, what they're doing is pales in comparison, like to everybody, right? Like they own the U.S. convert market. Like it's insane. And I think it only gets more insane in the next 12 months.
I think we have to look at who Saylor's marketing to, right? I mean, if you look at their strategy and what they're trying to do, part of pushing his strategy forward is onboarding the type of capital that needs to hear that message from him, right? There was the early message out there of everyone saying the only way to interact with Bitcoin is to have it on a hardware wallet, and otherwise you're just a tourist in the space, right? And to be clear, I totally advocate for people learning how to self-custody, and having that option available to you is so unique for a financial instrument like this. But he's pretty clear when he says, I'm trying to onboard the next $1 trillion of capital. Yeah. And the messaging that needs to come along with that is different. And he needs to get them into a different mindset about what exactly they're holding this asset for, and how they're going to do that through channels that they're already familiar with. And what they're familiar with are these mega banks, right? That's who they trust so far. Like it or not, that's a reality of the corporate world. And the custodying it by yourself, right? Well, that would kind of go outside of the bounds of their fiduciary duties, just because you've exponentially increased the risk of loss. Whereas with some of these mega institutions, you get certain protections that you have to be able to provide your shareholders. So the messaging is going to differ every time he talks, because he's not talking to the same people we're talking to. Yeah. Right. He's not talking to the individuals. Say, you got British HODL. He'll do the get to 1 Bitcoin, right? He'll do that. Saylor's going, it'd be great for your company is if you bought 30,000 Bitcoin, right? It's a different message.
Yeah. And I'm going to double tap on that one. And thinking about collateral, I'm obsessed with this idea of collateral, right? Like any company that is buying significant amount of Bitcoin is interested in using it at some point in the future. And what I mean by that is, Bitcoin is the best collateral on the planet. It's fully traceable. There's a ledger. It's globally liquid. You can trade it any time of day. And if you hold 30,000 Bitcoin on a cold card, you're not using it as collateral. Like, that is cold storage that's blocked away, that's gone. It's never to see the light of day again until you like need it, right? But these corporations are going to be interested in parking that money places. They're gonna want to use it. So you can almost think of each Bitcoin as like a little vehicle. Like, I want to park this little vehicle over here, and I may want to use it. I may want to put it at risk. I may want to use it as an insurance in an insurance capacity. I may want to use it in a banking capacity. I may want to use it in a lending capacity. And the future of financial products built on Bitcoin is going to expand. I'm telling everybody that right now. It is going to expand. I am literally working on it. And that will happen over, it's going to take time. It's going to take 12, 24, 36, 48 months as we get regulatory approval. People need to understand what they're holding. The liabilities need to be matched to the assets. So I'm incredibly bullish on that, and I think it's important to think of, like, if you're gonna have somebody hold this as collateral, they need to be able to move it, and somebody's going to control it. And that's not going to be likely not going to be most institutions. It's going to be institutions working with other parties, like banks, to use it as collateral in different locations. Somebody put counterparty risk. I mean, counterparty risk. Yeah, it's going to exist, right? Like, counterparty risk exists in the current system. Right, like, fraud happens everywhere, but in this instance with this asset, you can literally track it. You can literally write code where you have multi-sig formations where you have if-then statements. If X is satisfied, then Y happens, and the Bitcoin can move. So it's programmable. I think Ryan, you just put it. Yeah, programmable money. Nailed it. And the future of programmable money is going to expand drastically.
Hey, I just want to let you know. So hold on, for counterparty risk, not to scare anybody, but SIPC insurance on brokerage accounts only $500,000. So people are like, oh,
Get 'em.
I got FIDC insurance. I'm like, okay, but a brokerage house only has $500,000, and you'll never hear that stat come up. I wanted to switch over to MNAV for a second, if you don't mind.
Yeah, jump in there. Let's rip it. Let's see where it goes.
Hey, so let's. You know what happened? So the night before, we're at Bitcoin First, and Jeff and I are at the bar, right? And we see this gentleman there. We're all talking, we're drinking, everything's great. And this guy had no idea who we were. He's like, I don't know. This guy over here, his name is Grain of Salt. That doesn't make any sense. And he was a very, very successful real estate developer around the world, built these buildings and warehouses, residential. And I said, and so I wanted to probe a traditional person on multiples. And I said, hey, have you ever sold a business? He's like, oh yeah, I sold businesses. I'm pretty successful at doing that. I go, how do you value it? And he goes, oh, well, it's a multiple of EBITDA, EBID, TDA, earnings before interest, taxes, depreciation, and amortization. And I go, cool. I go, what's a typical multiple? And he goes, well, it depends upon the cash flow. And I'm like, great. So what is it? He's like, well, it could be 6 to 8. I go, have you ever sold at 12? He's like, oh yeah. I go, well, how do you figure that out? He goes, well, you look at the underlying cash flow and what the growth is going to be for it, and then you pick that. And I go, why wouldn't it be 1? And he goes, it's never 1. And Jeff was there listening to this whole conversation. And I'm like, oh, it's always a multiple of the cash flow. And so there's a sentiment that when you buy a company based upon cash flow, it's not equal to what's coming in. That cash flow is going to grow. And it's valued based upon the perceived value. And what we heard all over time to the Sotheby's guy, the super awesome guy, narrative defines price. I did not come up with that. Okay? Narrative defines price. And what that means is that I think that Saylor is defining the narrative. And if you believe that, there's a multiple for it. I don't know what that multiple is. I think it's pretty big. But anyway, Jeff, you were there.
Yeah.
Is that fair?
No, I think you nailed it. Well, you kind of, this MNAV concept and this theory is really funny because, I mean, there are so many people are asking, how do I calculate MNAV? Well, it's like, that question alone means that this thing isn't going to trade on MNAV. Nobody, people have different perspectives of what that looks like. Additionally, the fact that you have a single holder let alone everybody else on this call, let alone everybody else on MicroStrategy that's holding this regardless of MNAV. The fact that you have a single holder that is not trading on MNAV will tell you that it will not trade on future MNAV. And as the price of MicroStrategy grows and is included in these passive market cap weighted index funds, that the number of passive buyers and holders is going to grow exponentially without doing anything. And I think trying to trade this thing based on some made up fucking number of MNAV, you're going to get wrecked. It's going to be impossible to trade. It's like jumping onto a bullet train. Like, yeah, you might catch it right, but you might rip your freaking face off and your arms off too at the same time when it's rolling past you at 200 miles an hour. And it's an interesting concept.
Well, the thing with MNAV is that it's a calculation. It's not a commandment. People are treating it as if it's this thing that must follow a certain multiple, and if MicroStrategy trades above or below it, then that means something. But quite frankly, the MNAV is just one singular aspect of how you can assess this stock and assess this investment opportunity. And I don't know why the MNAV conversation has gotten so big lately. I personally think like Seeking Alpha and like Motley Fool and all these other guys have a lot to do with it, but it's only a piece of the puzzle. So I don't know why everyone is so fixated on it all of a sudden.
Yeah.
And
jump in there, Dan. Yeah.
Yeah, and I was just going through the 10Q report today, and obviously FASB, the old intangible asset accounting for Bitcoin and digital assets is still in place. And if you look at the actual net assets held by MicroStrategy as reported on their quarterly report, they're trading at actually a 15x MNAV. So like MNAV is just kind of an arbitrary metric. It matters. The point here is obviously that's not the real multiple to net asset value when Bitcoin's marked at fair value. But you could look at the 10Q report and think they're trading at a 15x MNAV. So this MNAV is just like a moving target, and it doesn't actually, as Adrian's saying, have any sort of like real bearing on what the price has to be.
Yeah, and just thinking about the design of the market too, right? Like Apple. I like focusing on the top equities. Like if you look at the top 10 equities, like how do you compare them? It's a really challenging dynamic because they all have very different metrics. Most of them are tech companies now, but they used to all be oil companies. Like go back 15 years ago, the top 5 companies were oil companies. And now fast forward today, now the top 5 companies are tech companies. And even comparing, top 1 to 5 to 10, it kind of just comes down to investor sentiment. Do I like Apple more than NVIDIA? Am I putting more dollars in NVIDIA or am I putting more dollars in Apple? And really, the narrative on some of those top equities is crafted after the valuation occurs. People say that, oh, it's trading at X years forward, 10 years forward, 5 years forward, and that's because people are rationalizing this valuation based on the design of the market pushing these equities up to their position that they're in today. So yeah, it's a bit strange that people are trying to trade on this thing. It's crazy. And good on them. I know that Blockstream had put together CMSTR, which is priced in Bitcoin, tradable 24/7, and you can hop back and forth between Bitcoin and MicroStrategy. And that's an interesting trade, because you can trade it on the weekend if you think there's asymmetric information. But aside from that,
what if you looked at them like a startup, right? And I know MicroStrategy's been around for a long time, but what if you looked at this from a different approach where you go, they're doing something totally new, right? It's a new product. They're bringing Bitcoin and they're in the building phase, right? He's communicated out that he's essentially building a bank or whatever you interpret that to be. But a lot of these startups, when they're starting, you're looking at future monetization of their product that they're building. So if you look at what Saylor's doing and what he's building in real time, if you start looking at different ways to value that, if you were looking at future earnings and you thought that there was even a 15% chance that he'll be able to one day, just if this was all he could do, was take 100,000 of his Bitcoin, move them to a custodian, get 1%. If Bitcoin's trading at $100,000 a coin, right? I mean, start doing the math on what that does, just bringing that interest expense in the door. And then you look at his product, and what they're offering is no longer a BI software product. I mean, they are, but that's not the core business anymore, right? They've evolved. And now, the post I did the other day where I was talking about, how I'm starting to view them more as like an Amazon for the capital markets, where they're kind of working through each of the steps of each of the different types of products they can issue out into the market. And instead of going out and focusing on the acquisition costs of getting a new company to spend $250,000 a year on subscriptions with them, they're building a Rolodex of companies that are trying to kick down their door to throw $1 billion at them, right? And so the value that comes with that, when you're raising things $1 billion at a time and you're taking this arbitrage in the capital markets to be left with all this unencumbered Bitcoin on the back end, if you believe there's even a very small chance that he's going to be able to monetize one piece of that, then you're not putting a big enough premium on this, because the ways in which he can amplify this strategy moving forward, if he accomplishes that, if he's part of the people that are pushing this legislation forward, that's making this asset monetizable to banks, which then trickles down to companies like MicroStrategy, the things he can do in the capital markets, if he has an extra $200 or $300 million a year coming in the door, is insane. I mean, I've started running math on this in the background because, anyone who's in here knows that we're all, model nerds out here. But so you start modeling out what are all the different possibilities here, but it gets really insane. If you look at what he's done so far with $65 million in cash flow available, he's only using 34-ish of it right now. So now give him 300. And think of the products he'll put out there. You're talking right now, they're just doing unsecured convertible bonds. That's all they're doing in the bond market. But say he goes out and he does a zero coupon bond, right? He goes out and he raises $1 billion. It's a 5-year bond. It's 5% a year. So he nets $750 million. And all he says is, I'm going to hold that in cash. That gives me $150 million a year. I could service interest expense or coupon expense on bonds. And he could take that and lever it into more converts and just clear that debt later at a much higher share price, right? I mean, the possibilities for what he can engineer here is incredible. And I don't think people can wrap their heads around what a premium looks like for that. I can't. I'm trying, but I can't, because every time you flip over a new product, he could do a Bitcoin-backed bond, a fixed income bond, right? When he gets down, you've got so many products for so many market conditions that all have different customers looking for them. And that is huge. And people just do not get that. And they will. I mean, everyone who's on this call, I think, does. But, it's a long enough rant from me. But that's kind of where my head goes when I look at MNAV, and I just kind of go, who cares? You're thinking too small and short term.
Hey, Ben, I just got to chime in. When you say these things, I have to show so much restraint not to buy more. It's just, I'm like, oh my God.
Buy.
Because Ben, do you think that you're correct with what you just said?
Yeah. Well, I'm betting on it.
Right. So now I'm struggling to stay away from just selling more MSTX to buy more options to get more leverage. It's like an addiction. So
keep using Dan. Maybe Dan can act as the buffer. He can go, but Ben rants and goes crazy. But now let's do the more responsible, degenerate thing.
Right. That's what Dan's like, dude, you don't want them all out of the money. Get some in the money, do some later strikes. I'm like, okay, that sounds reasonable. Okay, thank you.
Only max leverage. Go ahead, Adrian.
Yeah, so to Ben's point, the thing that people are really underestimating right now is that when Bitcoin hits 100, 150, 200,000, so on and so on and so forth, the level of attention the company is going to get just passively is also going to push up the BI business, right? So there's going to be, as Ryan loves to talk about, that recursive feedback loop where Saylor's going to have more and more money to service more and more debt. And, I made the Berkshire Hathaway comparison months back, and people were in my DMs talking shit about you. But I'm just like, look, pay attention to what's happening. Most of the stock accretion we've seen in the last several, I would say 25 years, a good 30% of that has been driven by stock buybacks. It hasn't been because the stock market has all of a sudden become this self-fulfilling engine that is just becoming more and more efficient. These companies are becoming better and better and better. I tried to find like a stat on it. I think the number I tapped out at was like 650 million or billion, sorry, with regards to stock buybacks just in the last 10 years when you do the math on it. So you have, I think, more zombie companies than we are aware of. There are a lot of companies that are doing stock buybacks that are staying afloat, that are returning value to their investors in the form of stock buybacks. But there's two pieces of that puzzle that people don't realize. One, stock buybacks were illegal until like the early 80s for a reason. And two, that's not really giving value. What Saylor's doing is accretive. What they're doing is ultimately long-term dilutive. So I think that this is really going to catch the market off guard when it really takes off. And a lot of people are going to be caught with their pants down, wondering what the hell is going on, because you're going to see MicroStrategy go from 40 billion market cap to 80 billion market cap to 120 billion market cap. And it's going to seem like it happened overnight. But in reality, by the time we hit 2028, if MicroStrategy has double or triple the market cap, I'm not going to be at all surprised. As a matter of fact, I'll be surprised if it's not much larger than that. So I'm very, very long MicroStrategy. I'm longer Bitcoin, obviously. But I think that people really, really need to dig into this and understand what he's doing. And to Ben's point, he's doing something that's completely novel. It's never been done before. So all the conversation about MNAV and valuations and multiples and blah, 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 it's really missing the whole point. Those aren't really going to accurately reflect the investment thesis and investment value of what MicroStrategy presents to us. So
I think one thing that other people may fail to realize, and I brought this up when Ryan and I were chatting with Anders earlier this week, we've got the concept of BTC yield, but there's also this concept of human resource yield, right? MicroStrategy is the most is likely the best company to work for in the world right now if you're thinking about equity upside, right? Like they are going to be able to hire the best talent on the planet to build out future cash flowing business ideas. And it likely doesn't take many people, right? Like you need 4 coding nerds to build out some Bitcoin infrastructure. And all of a sudden, like, boom, you could create a $10 million cash flowing idea with 4 dudes. And I think their ability to hire the best talent in the world. What's the guy's name? I think he was just hired recently, or he's kind of like the intern graduated from Harvard. Chadiana, I think is his name. Yeah, Ryan's there. But I mean, Harvard grad, super brilliant dude. They're going to be continuing to hire the best of the best in the world to build out whatever it is, AI infrastructure, decentralized IDs, future Lightning networks, whatever it may be. And the human resource yield to build out future infrastructure cannot be understated. This is likely the best company to work for ever if you can get on board and have some sort of equity compensation included.
Well, look at the story that they're putting out there in the market for other companies, right? So just go back not that long ago, and this was a $1.5 billion company. And with a targeted team of, call it 12 mercenaries in your treasury department, they've generated $41 billion of shareholder value over the course of 4 years. You know how crazy that is? Like the return on that investment for that team. Like treasury used to be such a boring job. Like you're managing cash. Like it used to be so boring. And now, and we've got one on the call with us, right? I mean, Dylan's doing this in Japan, and look at how Metaplan has just been outpacing everyone over there. So it shows what a really dedicated team of focused people that are thinking differently, right? And they're doing it through finding ways to exploit the capital markets. But just that small shift in the introduction of an asset like Bitcoin into the markets has totally changed the narrative around generating shareholder value. How many products can you generate, even if you're a large company, to add $40 billion in shareholder value over the course of 4 years, right? I mean, it's an insane return.
Yeah.
And they're doing it with a couple people. So they've got 2,000 employees. They've got like 800 of them that are in research. And so I look at that and go, they got to be building something, because you don't have 800 employees just focusing on your BI product. That's more people than you have running your BI product. So to me, I look at that and go, maybe there is some upside here for the decentralized IDs. And that's a big idea. People underestimate how big that idea could be. You know, Adrian and I have talked about this, and Ryan and I have talked about this for countless hours. But, you know, there's a lot of things they might be able to do to keep adding to that cash flow engine that just keeps ramping up this cycle and this arbitrage opportunity they have to arbitrage the US dollar in the capital markets to keep accreting Bitcoin to shareholders. And I think that it's one of those studies that these other companies are going to be forced to look at, because you can only ignore them as an anomaly for so long before you're going to have to start answering to people, why didn't you even consider this? Right? Why were we left on the side?
Hey, I want to chime in on that. One of the things that I say is that next August, so 4.5 years ago, Michael Saylor started on this at MicroStrategy. And the reason why I like 5 years is because you say to somebody, well, Saylor started this a half a decade ago, so I think it might actually work. And it's a publicly traded company. They've filed all their paperwork for this to make it work. It's kind of obvious, right? Well, this company's got a half a decade head start. How come nobody else did it? Well, they don't have they're too scared of the career risk with a volatile but yet non-risky asset. And I use those terms very, very specifically. And one of the things I tried writing about Andrew Ross Sorkin today on TV was they had this, I don't know, this ex-CEO of some company on. And he's like, oh, yeah, $8 trillion, government's printing this. They're not going to solve the deficit. And the thing that killed me about it was Andrew Sorkin just interviewed Paul Tudor Jones about Bitcoin freaking 30 minutes before it. And I'm like, and the guy goes, well, you know, Congress isn't going to fix this. I'm like, well, maybe. We had a guy on this guy worth $5 billion 20 minutes ago, and he started on Bitcoin back in 2020. Maybe as the corporate CEOs should buy some Bitcoin on the balance sheet. Maybe. But I don't know why Joe Kernan and Squawk, you know, and NBC, Squawk Box, whatever, they can never say, oh, this billionaire just said this, and now you're a corporate CEO. They can't shift in their brain literally 20 minutes after to the next segment. I don't know why that exists. What, they're going to embarrass the guy? Somebody please explain that to me.
They're just not going to, you know what I mean? There's a clear-cut founder-led incentive structure for people to want to be on this path, and it's not going to be Johnson & Johnson. It's not going to be Bristol Myers Squibb, my alma mater, which Bristol and Myers started the company 100 years ago, before the Depression. And then the Squibb merger came around the 1980s. But like, these people aren't going to do this. But the two quick points I want to make, and then I'm going to pass it back. The easy thing and then the hard thing. The easy thing is like responding to all of the motley fools of the world. I mean, these guys are just as delusional as they could possibly be, and they're not even worth airtime, like Motley Fool. But there's also going to be like the Seeking Alpha articles, Jeff, like which I've shared with you in the past, where they almost word for word copied me and Jeff's work in the, in the Seeking Alpha article from 6 months ago. Because I looked at this, I looked at this thing, and the words that like in the title and like the words in the actual paragraphs were like reflexivity, flywheel, gamma, all this stuff. It's like, this is like exactly what me and Jeff wrote like 3 months prior. So that's again, that's like the easy part. It just is what it is. They're going to copy our stuff, whatever, who cares? The hard part is like what Saylor said, right? Because that actually takes like a outside of the box thinker, let's call it, who has listened to Saylor since the Breedlove series. I know Mr. Dylan LeClaire was like in the stock before any of us. God bless him. You know what I mean? But like, I was following the Saylor playbook all of 2020, even before I knew who Saylor was. I was buying like Tesla stock and Bitcoin. and I was figuring out like how do we do this whole cold storage stuff. And my college roommate at the time was well more advanced than me. He was like, "Yo, buy this, do this, blah blah blah, all that stuff." But then Sailor hits the scene, and he said a lot of things. He said many things. One of those things was, that he said, "Not your keys, not your coins," just like Andres Antonopoulos. You know what I mean? So it's like we have to see him for what he is, not what we want him to be. And that's kind of like a broader life like idea. Like we have to see people for what they are, not what we want them to be. Meaning Sailor is not going to talk like he's a guy who has like half a Bitcoin or like 2 or 3 Bitcoin on cold storage. And God bless those people. God bless those people. Because I was one of them. You know what I mean? And we love those people. We love all the people. But that's not even the point. The point is he's gonna be talking about an asset class right now, Bitcoin, that's $1 trillion, probably 1.2, 1.3, whatever it is. And he's going to be talking about an asset class that he thinks can go to trillions of dollars, meaning a 100x or more from here. And he clearly laid that out in that whole like 99% of the capital is like elsewhere. Only a very small amount of it is actually in Bitcoin. So that's the whole point right there. I want to pass this, but it's like we have to interpret people for what they are, right? Me, Jeff, Ben, Dan, Hillary, Grain of Salt, all the guys on the call, like we're kind of like equity analysts first. Dylan LeClaire got a great job at Metaplanet. We should recognize these people for what they are, either analysts or chairmen of companies, and just take that for what it is, because the words that they're going to say are going to be different, and they might seem contradicting at points. However, I think in the broader scope of things, and we already saw Sailor responded today, right, about like I support right to self-custody, all this other stuff. We have to see people for what they are, not what we want them to be. That's my point.
I love it.
Well,
Thanks,
along those lines too, it's like with the points about Sailor talking about crypto anarchists and all that stuff. Ben touched on it, you touched on it, Ryan touched on it. He can't talk like someone that is going to be completely unhinged, fly by the seat of his pants, unpredictable, so on and so forth, right? Companies are going to see that, and they're going to be very, very turned off by that. And it's also going to project a negative image of companies and individuals that adopt this Bitcoin strategy as being individuals that are, they're not willing to work with traditional finance, or they want to upend traditional finance rather than enhance or work with traditional finance. And I don't think that serves them well. So a lot of his commentary, I think, is evolving along the way, and he's going to become, I don't want to say more of a company man, but I think he's going to have to toe the line a lot more in a lot of his discourse. Because in 2020 he was coming out with comments like, you lost in a boating accident, tax that, right? Now he's talking about, well, we have custodians, and we work with traditional finance, and we have so on and so on and so forth. I don't think he's a turncoat. I think he's adapting with the level of players that he's now getting exposure to. So he can't speak like he can't be one of us truly in all of his discourse. He has to really understand who his peer group is in this peer-to-peer network and play the part. And I don't fault him for that. And I think that, not to bring up another company, but with the case of like Eric Semler, I think he's watched Michael Saylor, and he's well aware of that, which is why he's being very, very prescriptive in what he's saying initially. And I think he's going to follow the playbook as well. So we, as much as we would love everyone to just be, fuck the government, forget about rules. We're gonna do what we want to do. There's going to be a Bitcoin standard. Everyone's going to be screwed but us. That's not really realistic. That's not really going to be the reality that we live in. And I think that we have to understand that as Bitcoin becomes more and more of a mature asset, we're going to have different players in the space. And like Ryan said, we have to kind of accept them for what they are. We can't want them to speak like us, but we can work with them, and we don't have to necessarily be at odds with everyone that doesn't say everything the way we want it to be said.
Yeah, absolutely. I mean, the reality is we're going to see. So what are there? 10, 15 companies that hold Bitcoin on their balance sheet right now?
293.
293. Holy shit. Publicly traded?
Not all publicly traded, but
Okay.
there was a list that broke out that had 293 on it, I believe.
Yeah, okay. So publicly traded, a fraction of that, maybe 10%,
Yes.
maybe 30, right? So you got 30 companies, 25 of them are miners. The reality is that number is going to explode. And we're going to see likely a drastic increase in the number of companies that put Bitcoin on their balance sheet purely from a diversification standpoint. They're not going to know shit about it, but they're going to add 1%, 2% because it's a hedge, right? It's a hedge against the rest of their portfolio decaying. And it will be interesting to see how that plays out. But I mean, Saylor is instrumental, right? He is, I think I said this, like he is the Andrew Carnegie, right? He built the bridge and now he's going to stand on the bridge and he says, hey, look, this bridge fucking works. And my stock just went from $4 billion to $40 billion and it's going to go to 10 trillion. You want on board? Like come across the bridge. Like it's fine. And it's actually kind of crazy that he can talk his book and basically like pump up Bitcoin, but he's not talking his stock. He's pumping up the asset.
Well, he's the only strategy that's incentivized to bring other people in on the strategy, right? Think of any other business that you're in, right? Any other product you launch, your whole goal is to throw up roadblocks to stop all the other companies from getting in. You file patents, you file trademarks, you do all this stuff to block people. Saylor's out here begging people to get in. And it's because it pushes him further into the lead. I mean, we had this conversation, I don't remember if it was amongst ourselves or where, when everyone was saying MicroStrategy doesn't have a moat. And you're going, what are you talking about? Like they have a massive moat. Like what could be bigger than having this 250,000 stack of Bitcoin for now and inviting everybody with deep pockets in? He would love for Apple to come and say, we're going to deploy, $40 billion and buy Bitcoin. Because you know what he's going to do? He's going to open up an ATM. Bitcoin's going to spike like crazy. He's going to sell shares at a huge multiple. He's going to capture all that accretive value and he's going to buy a boatload more of Bitcoin, driving the price up higher. I mean, people undersell just how clever this strategy really is. It's the only friendly strategy where he's throwing conferences to teach you how to do it. And we've got this weird opinion where, every company we look at, we want them to be leveraged to the gills. We're looking for the next one. And I don't think we need to because we already found the one that's well in the lead. Now, I like other companies as well because I like to support any good companies that come in and support Bitcoin because I think that personally, I just think it's a good thing to do. But the reality is for most companies out there, really the only thing they need to do is convert cash to Bitcoin. Just stop saving in cash. And if you could get 5% of the companies to go do that and say, listen, all we're going to do is we're going to start, we think this could secure us for the future. We're looking at the debasement. There's no way it's slowing down. We're just going to adopt that part. We're just going to have the treasury part. We're not trying the levered. We're not going to be clever in the capital markets. All we're doing is converting our cash balances and holding it in Bitcoin instead because we think we can preserve our value. That's enough. And Saylor wants that because that is just going to drive his strategy forward. I mean, he's way in the lead. People don't understand how far in the lead this guy is, but he's been leapfrogging us. Look how much time we've spent looking into this, and we're finding new stuff every day, right?
Yeah.
I never run out of things to pontificate people to sleep about because every time you think about it, you go, oh my God, what if he's doing this, right? Like there's all these different ways to turn. So anyways, I'll stop, but it's a fun thing to talk about.
Absolutely.
I said 293. It's actually 93, but 2,549,892 Bitcoin.
2 million Bitcoin, 93 companies. Interesting.
Yeah. 2.5 million.
Interesting. I mean, Dylan, you probably have companies knocking on your door left and right. You're like, okay, you do it for MetaPlanet. I mean, any signal there? Like, are people knocking down your door saying, "Hey, I want you to come do this for me too"?
Well, I mean, yeah, I'm an employee there. But no, I mean, there's a lot of Bitcoin. There's a lot of smaller type Bitcoin companies. I mean, I'm obviously well aware, and open about the fact that Metaplanet's starting from an extremely small base. I'm not even here to talk about Metaplanet or what we're doing, but it's obviously inspired. I mean, the playbook has been open sourced. Yeah, I think it happens globally, and it was a particularly unique opportunity over there. I particularly like Saylor's framing. I think he's gotten, like, I mean, he's always been killer with the pitch and the Bitcoin thesis, obviously, but the narrative, instead of talking about it, he's like, it's not a money glitch. Like, instead of talking about this arb that like may or may not be temporary between like market cap and balance sheet, and like we're exploiting the thing, he's like, no, like we're Bitcoinizing the legacy securities market, and no one else can do it in any meaningful size or liquidity right now. And like this is where everything's going. Obviously, like the bond market's screwed. There's no way out. Financial repression. Like, yeah, we're just gonna like just keep lobbing billion-dollar chunks of converts, and like he keeps talking about preferred stock recently, right? So like I think we can expect sometime in the next quarter. I have no idea, but like where are they going to get that like convert the preferred stock priced at? You know, like where basically just like front like paying like 5% of the profits or whatever, or like, you know, peeling some off after you buy some Bitcoin. So I think, yeah, they're going to get super creative. And I think really it's about the BTC yield thing. I say thing. I think Saylor realizes and MicroStrategy realizes they have a real shot to like actually create a new metric or a unit of measure and finance, like long lasting, like a couple decades out. I think that's like one of the ultimate visions is like, all right, we're going to a Bitcoin standard world. If that's the hypothesis, if that's what like everybody here believes or pretends to believe, then like this, you know, how fast you can increase this per unit of share, right? For a shareholder that sits there and does nothing, what's that rate, right? And so I think that there's something bigger there. It's not just like how they measure success. It's not just how shareholders measure it, but like I think the bigger idea, the fact that they're having conferences called Bitcoin for Corporations, they want other companies to come in and not just like, you know, not just fringe zombie companies, right? It's like the idea is, you know, the Apples of the world aren't doing the MicroStrategy playbook, but they're like, you know, having 25% of their market cap in cash holdings, right? But that's like a multi-decade track. It's still pretty remarkably early. And it's, yeah, I don't see anybody catching MicroStrategy, just in terms of the size, right? It's like they're hitting escape velocity in relative terms, or, you know, relative and absolute terms. They've already hit it. So
yeah,
exciting times.
I couldn't imagine being like EY or whoever their auditor is, and, you know, like creating this yield metric on their 10Q. It's like, oh my God, yeah, I guess we're going to do this thing. And, you know, we've got to get it approved, and you got to, you know, do all that stuff. Crazy. You brought up Apple again. I love this concept of Apple. I think the worst financial move Apple has ever made and will ever make at any point in their future. And we're going to look back on this. In May of 2024, they did a $110 billion stock buyback. And I think we'll look back on that opportunity to at least, you know, they could have bought $5 billion of Bitcoin and put it on their balance sheet. You're right. Like 0.1% or 0.5% of that 110 billion, and, you know, fundamentally change the game. I think we're going to forever look back on that moment where Apple missed out on an opportunity, which is interesting.
And now dividends. It's just going to keep getting worse.
Yes. And, you know, Neetu, I'm gonna go back to you here in talking about Bitcoin yield, and you created a little video about my concept of, you know, thinking about forestry management and the second derivative of S curves and BTC yield. And I think that might be an interesting topic to kind of hit on if for the people here.
Yeah, I had a little bit of an aha moment when I was watching that episode, and when you mentioned that different or that the Forestry Service uses calculus to basically determine when to harvest trees, because they're going to grow slow and then they're going to grow super fast and then they're just going to be mature. and you might as well harvest them as soon as possible right after that moment. And it just made me think of MicroStrategy and then all of the other, little trees that are going to start sprouting up. I think you mentioned there's 30 companies with Bitcoin, and 20 something of them are miners, but there's going to be more, and every single one of those is going to be a little tree planted in the MSTR universe, in their little garden or whatever. And if somebody can figure it out, you might be able to choose the company that's in that growth spurt and then ride that up and use it almost, maybe some kind of rebalancing between all of these different MicroStrategy copycat companies. It's a super fun concept to think about.
Yeah, in my thought process, right? I think MicroStrategy is going to see this exponential meteoric rise. It's going to go from where it's at today, 40 billion, and likely to the top of the publicly traded leaderboard. Well, I think it's pretty binary. I don't think it's going to, fumble around 70, 60, 70, on the leaderboard. I think they're going to the very top and maybe between the top 10. And so now you have a mature company, and maybe the BTC yield is, slows down over time once they're at the top of the leaderboard. But to your point, I think it's an interesting concept thinking about these other companies that start adopting a Bitcoin strategy, but they have significant cash flows, and maybe they use those significant cash flows to acquire Bitcoin at a faster pace. And you may see these companies that are acquiring Bitcoin at a faster relative pace to MicroStrategy, and that might be an interesting metric to watch. Is this BTC yield across the market and the rate of change of the BTC yield for all of these other companies? It's an interesting concept. I'll do a quick brief on the forestry management. Basically, if you plant a forest, and you want to harvest the entire forest for yield, if you wait a year, the trees aren't big enough. Like, your yield is trash. If you wait 5 years, maybe the growth rate increases, and there's a better bang for your buck on terms of time to yield. So if you wait too long, you wasted time. If you cut the trees down too early, you have no yield. So there's this kind of like sweet spot where you take the second derivative of the yield curve, and you find where the rate of change has an inflection point, and that's the maximum time to harvest a forest. Companies like Weyerhaeuser and other forestry management companies up here in the Pacific Northwest use these metrics. They literally use calculus to manage their tree harvest. So these are concepts I think that could be used in understanding the future of the equity market potentially. So complex. Anyway, hey, go ahead, Dylan.
One just quick interesting point on it is, like, if we're thinking about how big MicroStrategy is going to be in this bull cycle, and you're thinking, and I know a lot of people here are like, it doesn't matter, or it's fuel to the fire, and like the more irrational it gets, the more the fundamentals improve. That like reflexivity flywheel, like all of that, of course. But then if you're thinking in like peak bull market, what's the rate of change of your BTC yield starting from zero, right? And it's like infinity as you're starting to stack, right? So for any company late game in this bull market that's like, holy shit, they're trading at 10, like whatever X book, right? Or like book value as they see it. Like, what should I do? I should go stack a bunch of Bitcoin. I should go do like, Apple's doing these like massive, I'm not saying Apple's going to do it, but like these companies already can tap financing like instantly to sell stock, to buy stock back, to get a secured bond or whatever. And so like, why wouldn't, if another company's here and they just qualified for the S&P 500 from just stacking a commodity and continuously issuing more equity and debt securities, like they're going to do it too. And they're going to do it with like pretty good size. And like all of a sudden, even though it may not be the right time in the BTC cycle, because it's like, another 18 months of like, down, sideways, whatnot, bear market after like a crazy blow off top. If we're thinking about like previous cycles, then you're going to have a whole bunch of people doing the work right now that are like, oh shit, in C-suite level positions. Like, but these things take time, are going to be like buying a pretty massive size, doing like, I think how the world goes, like you're going to have bigger players like in real size starting to tap these markets. They're not as volatile. They're not as all in Bitcoin. But like, yeah, if my stock is volume, I'm going to do an ATM to buy Bitcoin, because why wouldn't I? Because there's a guy over there that's just increased his market cap because of what he's accruing in BTC per share terms. So like, look at my BTC per share. It's gone from 0 to 1, right? Or 0 to N. And I think that's like a pretty compelling thesis on like how the corporate world works, right? We've seen a cycle. There's now a lot of people watching. There's not a lot of people coming out and saying we've done it yet, but we're like flirting with the highs. And I think behind the scenes, there's a lot of people like actually starting to, consider it a real deal.
So along those lines, I'm not saying I disagree, but the thought process I have is this. How does, let's say hypothetically, one of the Mag 7 do this without setting off an all new bull run by themselves? How does Nvidia, Apple, whoever get into Bitcoin in size? I don't care if we're in the peak of a bull run. I don't care if we're in the doldrums of a bear market. How do they get in size and not just kick off a whole new run by themselves?
Options. Maybe Ryan says no. Options. I mean, if you're buying IBIT calls, you're like, okay, I want to get in. I'm buying IBIT calls. And
Hey, Jeff, I have an idea. Look, Michael Saylor said this before. He said this very early on. He said, look, he just had his really smart engineers. He said this 4 years ago. Just break up all the purchases over multiple exchanges and buy them up in pieces. He goes, we don't smash buy, or they buy over the counter. They can they can do this by using technology and breaking up the trades. When I buy and sell, I could do a market order, and I could sell the whole lot or break the lot up. So this is, I've been able to, all of us have been able to do this for at least 20 years with our own trades. So they can acquire these shares. Now, will somebody begin tracking the wallets? Absolutely. I wanted to shift.
But not to interrupt, but that's not what I mean though. So when I remember when Elon Musk announced that Tesla was going to get into Bitcoin, what happened, right? The market just went.
But Saylor
Oh,
doesn't pre-announce. You
Well,
don't.
hold
Go ahead.
on, though. Hold on. So what I'm saying is, once someone makes the announcement that they have actually gone into, imagine what happens if Apple says, "We have decided to add Bitcoin to our balance sheet." How does the market react to that?
But they do that after they
I
acquire
know
it.
they'll do it after, but what I'm saying
But
is,
then
once
the
the news
market
is
goes.
out,
The market goes, and by the way, there will be a shareholder revolt of 10 to 20% of the shareholders saying that this is magic internet money and it's complete bullshit and not to buy
Tulips.
it. Tulips and not do it. Hey guys, look, I'm a tech guy. I want to turn back the clock, and this will take a second here. And I want to use some very specific terms. Barrier to entry. Any publicly traded company, and as Ryan has said, that is founder led, or for some reason the board of directors, if they have the gumption to do this, can actually do this. But I want to go back to Google for a second. Google won a Supreme Court case, okay? And what happened was when Google came out, you had AdWords. And what they changed in 2004 was that you could buy a trademark AdWord. So if you saw another company and you're a smaller company, you buy their trademark name, right? And you advertise on that to show your ad. Immediately, that was like, let's sue the hell out of Google for this, right? It's called the Rosetta Stone versus Google case, and you can look it up. And that went on for 5 years, and then they switched then Google said you can go full bore with this. And Google's like, sue us, right? And they win the case. Now, Rosetta Stone said, you got a summary judgment, but that completely changed the whole market. So what happened is that when I told this to my dad, who was an advertising executive for 40 years, he's like, wait a second, you got a trademark. You can't do that. I go, oh, yeah, they could. And they lost the Supreme Court case. The trademark holders, the industry changed, kicking and screaming. The Supreme Court sided with Google. Where is Google today? The difference here is that the barrier to entry is very low with Bitcoin. And yet, for some reason, they don't have that fortitude to go out and do this. So, folks, look, I've seen this happen before in my career in Silicon Valley. These tectonic shifts happen. You saw Paul Tudor Jones. I don't own any fixed equity return, not equities, bonds, right? That came out today or yesterday. Dude, Paul Tudor Jones is the 343 richest guy in the world. I can't make this stuff up. He said he started buying Bitcoin because he liked it at $9,000 going back 4 or 5 years ago. I don't know when people catch on, when the billionaires become worth an extra $10 billion. right? I'm going to leave one last thing here because I got to go hop a red eye to go to the East Coast to go to reflexivity. I'll be tweeting with a Tim out there, so I can't wait to get out to there to the East Coast. But look, folks, things are going to change really, really fast, and either you could be on the bus or not. So I think that you guys should, do the research and really put your effort into this and follow these guys. So I appreciate everybody for coming. By the way, I'm blown away. What are we at? 7,000 people? Holy
Almost
crap.
8. Almost
Almost 8. I'll stay at
Which is crazy.
8,000, then I got to drop.
All right. Thanks, Grain. Yeah. I mean, this might be a good place to do it. Like a little bit of wrap up. Maybe if people want to ask a couple of questions, we'll throw it up for 10 minutes and, tackle questions for a few minutes and then hop off. But appreciate everybody for joining our inaugural first episode of MicroStrategy True North. Hopefully we can do this every week. Again, it might not be everybody. It might be a few people here and there. And this has been a ton of fun.
8,000 is a wild first episode, man.
That's literally
this is
half
awesome.
of my following.
This is
like
awesome. I know. It's crazy. This is awesome.
Jesus.
Folks, I want to look. I worked at some of the best tech companies. I see Ryan fingers up. I work at some of the best tech companies, and we would build this product. We spend 18 months building a product, go to a trade show, launch it, and I would have to pay. We get a budget for like $50,000 or $100,000 to try and get 100 people to show up on a freaking Zoom call to talk to them about some new product that we built that these engineers toiled on for 18 months, and it did. It's the number of VLANs or IP addresses or MAC addresses. And they'd be like, do you know how we got one MAC address inside another MAC address? And I'm like, yeah, I got that. I'm like, do you really think that our customers are going to care about that? Because you built scalability for the whole world and they only have 5,000 people in the company. So, it was so surreal. And so on this stream right now, 8,000 people, we didn't pay any money for this. I don't know. Did we? Jeff, how much money did you pay to set this up?
I don't know. Restream, whatever Restream costs. But
$20, whatever. I don't know.
$20 a person.
Yeah.
Bitcoin
this is awesome. Yeah. Think about this technology that we have today. And this is my first, I'm like the old guy. I'm Gen X, not a boomer. But this is the first time I've ever done a stream and I'm blown away. Thank you. Thank you much. Thank you so much.
Yeah, absolutely. There's a question on here that I think Ben is going to knock out of the park, but maybe not. It might be controversial. What happens in the event of a note maturity under the conversion price? I think there's like a low probability event because these things are so far out in the tail and like they're 8-year dated and like it's like 20% conversion.
Next. Refi.
Yeah.
Easy.
Yeah. Roll it.
It's one phone call at this point. Like people don't they just snap call. Like it's, there's an insatiable demand for a Bitcoin proxy and a bond. Like there's no one else has done it.
Yeah, insatiable demand, and the fact that they transform it, and like step down the volatility and make fit this product in this box, this like refinery concept. Oh my God, Wall Street's so fucking far behind. They're not going to figure this out for like a year. Jesus Christ. Ben,
the other answer to that is it depends on where it falls below, right? So if it falls below the conversion price, that's one thing, right? Then you're refi and roll for sure. If it falls between the conversion price and that 130% mark that I talk about quite a bit, there's actually a table if you go out and you actually look at the bond documents. So the number of shares that they report is actually assumes they achieve the highest value, but there's a step down. So there's actually a table inside each of the individual note documents itself that says how many shares are associated if it matures at a certain price. So it can depend. There could actually be more shares issued than what they put out in the press release because the press releases always assume it achieves the furthest price target out there. But there is a table that steps it back and it could actually be more shares. But we don't do bear talk here. So we're going to blow way past these targets, right? Not financial advice in any way, shape, or form. But we don't do what happens if we don't hit targets. But it is why I say a lot of times, their best case scenario is they want these to convert. One, it just frees the earlier the better, right? I could see if they hit, I'm going to rant for a minute, but if like these latest, the 2027 and the 2030 notes that I've been tracking every day where we're kind of closing in here on that 130% trigger, I could see a scenario where like these aren't people like us on this call buying these notes, right? These are probably 2, maybe 3 parties in each of these notes that are buying them. And I could see a scenario where MicroStrategy's on the phone going, it'd be really nice if you guys converted early and got out of these, because that frees that liability up off the balance sheet. It drops their leverage ratio down, and now they're back in the market, and they probably make a handshake deal going, you want the next ones? I bet you do. And they'll get those back out the door right away, and they'll be buying Bitcoin in no time. So it always depends, right? There's a lot of reasons to hold a bond, but at this point, with the price running up, they might be fully hedged. They might have taken the equity out of play already, and they might want out, particularly if they can get into the next tranche at current prices. So,
well, that's the thing. It's like, sign me up for the next one. I just outperformed every single company that's doing convertible bonds in the entire market for the last decade. And I'm like,
negative customer acquisition costs.
Let's do it again.
Negative.
Yeah, right. And it's gonna happen for the long term. Yeah, it's crazy. Thanks, Ben. Thanks, Dylan. Another one. If MNAV goes through the roof, is there an opening for another company close to one? I think that's asking like opportunity cost, right? Like it seems like an opportunity cost question. Anybody want to take that one? No.
What was the question? Where's the question?
Yeah. Sorry, I'll show it on the screen. If MNAV, if MicroStrategy net asset value goes through the roof, is there an opening for another company close to one? I think they're asking like, is the opportunity cost better with another company that's got a lower MNAV if they've invested in Bitcoin?
Yeah. It's tough, right? I've been running some of these models for like a Semler who's smaller. And I put out something before where I was looking at zombie companies and how you kind of need to approach scaling into a strategy like this. And the hard part is if they start right out of the gate, while they don't have a valuation on their company that's beyond net asset value or maybe even 1.5 times net asset value, the dilution effect becomes really heavy up front. And so there's actually a real incentive to use traditional debt financing early on in the process if you are one of these zombie companies that's way undervalued, because you can push that dilution event further out into the future. So if you had strong cash flow today, you could go finance, get this traditional debt. The banks will give it to you because you've got a strong unencumbered balance sheet. You've got strong free cash flow. And as long as you've got a debt service of 2 times what it would cost you to service the debt, is what banks look at a lot, they'll give you the loan. You can buy the Bitcoin today, and you could buy yourself essentially 3, 4, 5 years to allow that volatility to build up in your equity, where you could later either refinance it with a convert and just issue a lot less shares. But as long as you can get your balance sheet to be over 50% tied to Bitcoin, where that volatility starts to increase, the interest in your equity should pick up. You can punt the ball down a little bit further out, but you can collect all the Bitcoin today. So it's interesting how you approach the levers in these scenarios, depending on where your company's at in their journey. But the early ones have a little bit of a struggle because like a company like Semler could easily dilute 100% right out of the gate, but
yeah,
none of them want to do it. They got a lot of board ownership. You're not going to want to dilute that heavily, which is kind of the problem they've run into. So
right.
That's the long answer to that question.
Kind of comes down to, financial strength, right? I mean,
correct.
Yeah, go ahead, Ryan, hit it. You got something?
Yeah, I mean, look, here's the reality. Right? For the bull case, if MNAV is blowing out, it's kind of like in Jeff. We talked about this earlier on the call with Anders for MSTR Monday. It's like the flow chart that I laid out, right? It's the first question, the first decision diamond there is MSTR going to have more Bitcoin than any public company or any country? Right. And we can talk about the no side in a second if we get there. But the yes side of that decision diamond means a higher and higher and much higher than today's MNAV is fully justified. If this is the richest country on earth, if this is the richest public company on earth, then we're talking about an MNAV at 10 or 20. To me, right? And I know that sounds like barbaric. It sounds crazy, but so does, Mag 7 trading at a forward multiple of 30, 40, 50, You know what I mean? So it's like it's one of those things. It's the classic one of those things, right? Where if MNAV is blowing out towards 6, towards 10, towards 15,
That may not be blowing out, for the record. That may be the new normal. That may like the word blowing out. I'm just caution on the blowout there. Like that.
Well, what
might not be-
multiple is a rye quant marketing engine worth?
Yeah.
That's what we need to quantify here. 'cause-
Well, hey, if I have to put my name on it, this is what an inflection point is, gentlemen, ladies. This is what a repricing event looks like. It's violent to the upside, just like the way Brad Gurley, I think it is, him and the other Brad, they have a podcast together. Brad Gurley, I think it is. He talks about multiple compression is a bitch, and boy was it in 2022. Boy, was it the absolute worst thing imaginable. However, what we're talking about here is a multiple expansion, a like justified multiple expansion. These repricings happen in a matter of weeks, if not days. And I think we're coming, Jeff. I think we're coming right up to that point right now.
Should we share
with FASB fair value accounting, right? Because that is going to be where the meshing point, where almost, you know what I mean? Here we got it on the calendar. That is going to be the meshing point where MNAV and price to earnings kind of mesh into the same metric. Not exactly, but kind of mesh into the same metric. So us right now talking about, oh, is 2x overvalued? Is 3x overvalued? It's like overvalued. I'll show you 12x MSTR MNAV with a price to earnings of 8, and then let's talk about how overvalued we think it is now. But that's a repricing event, ladies and gentlemen. This what we're seeing.
Yeah. I mean, you think about the catalyst on the horizon, like all of this stuff is like happening at the same time, right? You've got this November 15th option expiration, which is pretty massive. You've got QQQ happening in December, which could be incredibly massive, especially if it continues to get front run. I mean, for God's sakes, if Trump gets elected on November 5th and Bitcoin and it's a clear, decisive win, and the price of Bitcoin runs into a November 15th option expiration where you've got a lot of options that are in the money, roll that into a potential QQQ inclusion, which might be 40, 50, 60, 70 billion. All of a sudden the new dollar cash flows that are coming in are exponential. And then you roll that into this like historic January 17th option expiration. I mean, it could go north. It could go straight vertical very quickly and blow out kind of all option expiration.
And doesn't MSCI front run QQQ by like 3 days?
Yeah,
Isn't
I got
there
it in here.
Rebalance 3 days in advance.
Yeah. 11, 26, 24, and then QQQ rank date 29th.
Which is perfect timing because here we are at near all-time high market caps, right? Meaning they're going to get a bigger weighting in MSCI. And that buying is going to happen immediately when we need it to get into QQQ. I mean, you can't time that better.
No, you really can't. And I'm sure that probably gets front run a little bit too. I mean, there's just so much front running going on in the entire market on everything, right? Like everything's front run by everybody. I think that's a really important concept to think about. Everything is front run by everybody because all of the information that we know, the rest of the market also knows. So as the market thinks that QQQ is on the horizon, the market buys with the anticipation of QQQ on the horizon. So anybody that's trying to do an analysis based on inclusion in an index fund, you cannot use the inclusion date as whether or not the value increases over time. You have to look before the inclusion date from which the information was available, whether or not they were going to be included. And so that's an important characteristic because I think if you look at most analysis on these like inclusion dates, you'll see that inclusion date doesn't actually influence market cap. But the reality is that's totally wrong. And all of these events are totally front run by the rest of the market. So you got to look at 30, 60, 90 days beforehand and then start to do the analysis from that perspective. So anyway, there's some questions on the January 25 option expiration. I love talking about that. I don't know if you guys are, can we go down that rabbit hole just a little bit and then maybe we'll end it on that one?
Go for it.
Yep.
Okay. You know what? Should I pull up some math? Because I did this earlier and I shared it with Ryan. Do I still have it open? Oh, where is it at? Maybe I don't. Okay. Oh shit. Where did everything go? I lost you guys. Okay. So January 17th, 2025. This option expiration date came out in September of 2022. So the leap option has been around. It's one of the longest leap options that's been around. And it's been around since the deepest bear market of 2022 and 2023, when Bitcoin was at its lowest, MicroStrategy was at its lowest. And this is kind of when I was developing my MicroStrategy leverage strategy and thinking about a potential bull market in 24 and 25 and the growth of Bitcoin over time based on past cycles. And I think many people took this bet. Many people were buying leveraged options deep in the bear market of 22 and 2023 and over all of 2023, recognizing the potential on the horizon with, ETF development, et cetera, et cetera. So the reason I think this is historic and a really big option expiration date is because at a price of $200, at a stock price of MicroStrategy stock price of $200, there are 140,000 options that are in the money. Those 140,000 options represent 14 million shares. 14 million shares represents 7% of the entire shares outstanding. These options contracts are incredibly far in the money. Like, you guys have seen my trade, right? It's 60x. Like, it's so far in the money, right? I've made so much money on this option contract. I have a much larger incentive to exercise the contract and purchase the shares than I do to sell the contract. And why is that? Is because the catalysts on the horizon for 25 and 26 are insane. Also, I don't want to pay capital gains tax. If I were to sell the contract, I would incur a capital gain tax event, and I'd have to pay capital gains tax on that gain. Alternatively, if I find capital and exercise those shares, then I have the ability to buy the shares at my original strike price, which is on a composite basis around $40, significantly lower than the $213 that it's trading at. And there's no better place for me to park my capital, right? I think everybody that's sitting in this option position is thinking about the exact same thing right now. The opportunity cost of capital. If I were to sell this contract that's super deep in the money, where would I put it? Where would I put that money? And the likely answer is right back into MicroStrategy because of the catalysts that are on the horizon, future Bitcoin bull run, et cetera, like everything that I just laid out previously. So I don't think there's ever been an event in history that has occurred like this before, where you have this incredible holder base that is fanatical about Bitcoin and completely understands the potential of this company going from 40 billion to 4 or 5, 10 trillion, and the future prospect of holding this company for the long term. Wall Street, when they hedge these positions, the market makers that sold the options, when they hedge these positions, they have to make an assumption on how many people are going to exercise these trades and hedge those positions to the downside in the event that there's a large exercise event. My thesis is that much of Wall Street is significantly systemically underhedged for this type of event in the event that there's significant retail exercising, institutional investors exercising beyond what is anticipated from a probabilistic standpoint. This is not a typical stock. And I think the information asymmetry has led to this really significant event potentially occurring in January. If you think about, like, Ryan will provide some example on like trading Tesla and VIX options. He was never thinking about exercising Tesla options. Never. However, this event, the incentive and the opportunity cost of capital is much heavier weighted towards exercising than it is towards selling because of the future prospect of 25 and 26. You guys have anything to add there?
Am I too late?
No, jump in. Jump in. You've got options perspective, man. Let it rip.
Yeah, the only thing that was a little bit, I'm thinking about jumping into those specific dates right after earnings. There's a little bit of a risk that earnings could gap up, but right before earnings, there's such a thing called earnings crush. Implied volatility tends to ramp up due to the anticipation of earnings. We don't know if it's going to be good, bad, or indifferent. And sometimes you can overpay a little bit right before earnings. So I am kind of considering taking up some of those positions the day after earnings. And, hopefully the price doesn't rip up that day. But I generally don't buy short dated options. And I would call anything under 60 to 90 days short dated, just because theta is so high and they're decaying so fast. But in this particular situation, with the scenario you're describing, it's getting a little bit too attractive, I think, for me to ignore.
You're talking like January, February?
Yep, the Januaries. The reason I say the Januaries is because that's the last expiration right before the next earnings call.
Yeah, the next earnings call will probably be the February 1st or something like that, which would be the Q4 and the 10K, right? That would be the annual view of 2024. There's potential for FASB inclusion with that February 10K whole year view. So it's an interesting dynamic. Again, I don't think it's ever really occurred before with this type of holder base. So it'll be an interesting event to watch because, I mean, 14 million, like imagine, all right. So these market makers, right? They're hedged. They all hold shares. They hold millions of shares. Hedged. Now they're hedged for all of the options across all of the expiration dates, across all of the strike prices. And they're hedged for 25 380s. They're hedged for 26 Jan 26 420s, right? Like they're hedged for all of these dates. And I think there's a probability greater than 0 that their hedge calculation might be wrong and they may be underhedged. And I think just based on the naivety in Wall Street and my experience working with some of these TradFi guys thinking that Bitcoin is still tulips, I think there's a high likelihood that they're underhedged.
Yeah, I'll definitely have to be looking at a different strategy though, because you're so deep in the money, you can easily choose to exercise. But if I go in and get a bunch of, well, they got the 450s now, right? So if I go in and get 450s, I don't think I'm really expecting those to go in the money by January and think, oh, okay, yeah, I'm gonna do the same exercise strategy that you're gonna be able to pull off. So I'll just have to have different expectations, I think, for mine.
Yeah, I mean, think about 450, right? Like, what's the price at? To say 213. So
Yep.
double it to 450. Yeah, 450. If you double it, we're talking $86 billion market cap. It seems insane, but that doesn't seem like that.
Well,
that doesn't.
Yeah,
seem like
and
that
actually,
much.
and I guess I'm trying to be have reasonable expectations, but it was $50 a share, well, post split, and it went 4x in 4 or 5 weeks. So
Yeah.
if it can do 4x once, it could do it again.
Yeah.
Not completely off the table.
This is part of the reason I want those IBIT options live, right? Because you know what's going to happen is people are going to get greedy. They're going to get off sides and they're going to get into the squeeze you can't get out of because Bitcoin's not going to issue more Bitcoin to bail you out, right? If it starts squeezing and they just keep having to buy more Bitcoin, Bitcoin, there's no way out, right? So who knows where things go, right? I mean, you can't even have targets hard. Like, I'm so terrified to sell covered calls on MicroStrategy because I know I'm getting my face ripped off. It's a matter of when, not if, right? It's coming. And so you look, and even this last week, and I did sin and I sold a couple on the last squeeze just for fun, not a ton. Don't get mad. But even then, you don't feel good. It's way up, it's way outpaced Bitcoin, and you're still thinking, I'm getting my face ripped off. It's coming.
Yeah.
And when IBIT options are trading and you finally got options that now settle to core Bitcoin, to spot Bitcoin, right? That's such a crazy product to have out there because there's no backstop there.
Yeah.
There's no GameStop. They can throw the breaker all they want, but if BlackRock still has to go buy Bitcoin, it's not going to make any difference when they turn it back on, right? And so there's no bailout like they had for GME.
Right.
So
I mean,
trying to
that's
figure
the
out what
whole
a squeeze
thing.
looks like. I mean, I temper expectations on MicroStrategy squeezes because if you look at the short interest and you look at the number of shares tied to the convertible bonds, it's really close. I would bet 75% of the short interest is hedges on convertible bonds.
Yeah.
So you might have, 5 million shares, 6 million shares truly short on MicroStrategy. So I temper my expectations there. But that short interest doesn't care about short interest in IBIT.
Yeah.
Right?
And a short squeeze is different than a gamma squeeze. Like this is very different, right? Like
Correct.
this is underhedged. Like I'm underhedged with the amount of shares that I'm holding relative to who can potentially exercise these. And I think somebody said, and Dan, thanks for responding to him. Like, who has the is there anybody that's not going to have the capital to buy these? Think about who owns these things. If you've got people that have $20 million in options on MicroStrategy, that's not 100% of their position, bro. Like they're gonna be able to like harness other positions to purchase these purchase these options.
Well, and to your point, if they're deep in the money, it's like they only need a small percentage of that actual value to exercise the calls in the first place.
I was looking at $100, the cost to buy at a strike of 100, the cost to buy all of the open interest out is like 400 million, but it's in a $1.5 billion profit position. So like everybody's at least 3x on all of those. Go ahead, Ryan.
So I want to touch on what Neethu just said right there. And I want to set the stage here for the reality of the human condition, which in my view is such that Neethu is one of like 2 or 3 people that I know, and I've met a lot of people. He's one of only 2 or 3 people that I know who I would consider to be a professional option seller, right? Guys like me, Jeff, Danny, the rest of the usual suspects are typically options buyers. The much harder thing to do is to sell these things to open. So when a native professional options seller is saying like, hey, hold on a second, I'm looking at these catalysts, I'm looking at the timeline, this doesn't look good for me. as a seller of covered calls, that's extremely interesting, right? Because guys like the rest of us, we're native option buyers. So it's like, whatever, of course they're bullish, blah, 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 all that stuff. Neethu, incredibly important perspective, is a native options seller. And he's saying all of the things he just said. So I just want to drive that point home between options buyers, options sellers, and like the buyers, like who cares? Of course, we're gonna be perma bulls, all that stuff, blah blah blah. He's talking about like, hey, I normally sell these things for money to like live on and like pay my bills and like live on. And even I'm like, okay, don't know if I want to sell it here. So I just wanted to drive that singular point home. That's it.
No, that's true for sure. Because usually it's like the weekly YOLO option buyers that are my bread and butter. I sell calls to those guys all the time. And there's some statistic. There's a huge number of purchased options, purchased calls that just expire worthless. And, I'm happy to let them just contribute to my fund. But as soon as I saw, when I first started getting into MicroStrategy, it was like, okay, cool, leveraged Bitcoin play. And premiums were great. And then it was kind of like, okay, I saw Quant Bros 1, and I saw Adrian's really, really long post about the reflexive flywheel. And I just had to do a double take, and I was like, oh crap, this is a little different than the, selling covered calls against the mining stocks and just not giving a crap if they get called away or not. And it definitely made me kind of take a step back and think, is this really worth it? And since then, I've been way more strategic. So I used to just sell covered calls mechanically. I didn't care if the price was up, down, left, right. The shares got called away, fine. But now, like you said, the catalysts are so so convincing that I've pared back my shorts like 75%.
Yeah, I mean that's alpha in and of itself.
Yeah.
Right. All right. Well, we've gone 2 hours and 5 minutes so far. So this is plenty. We should probably cut this thing off. Ryan's like, more. I want to do a 12-hour space. He's crazy. He probably just woke up at like 6 p.m. Pacific. So the guy doesn't sleep, or he sleeps during the day. It's like he's like a raccoon. So anyway, this has been a ton of fun. Thank you everybody for joining. I think my takeaway here, next Wednesday, we're going to be talking about earnings, which is going to be exciting. We're all going to watch the call, and then we're going to pop on and see how it goes. I think Ryan, you might hold a space, and then we'll kind of pop on after that. So thank you everybody for joining. Our plan is to do this weekly. Who knows where I will go, but our hope is to be a beacon of light navigating this whole crazy situation, because there's going to be so much FUD, right? Like everybody's going to be coming after this trade, and they're going to have no fucking clue what they're talking about. So that's why we're here. That's why we're talking about this stuff. And we almost hit 10,000 viewers. So super cool. First
It's
stream.
almost midnight on the East Coast,
That's
and we
crazy.
got 9,500 people in here. This is wild.
Crazy.
You guys are animals.
And all
I
the
thought
UK
only we didn't sleep. Apparently, we got a lot more people out here to run numbers with us.
Yeah. And all the UK people are going to watch it when they wake up tomorrow. So it's going to be even more. So thanks, everybody. We'll see you next week. And cheers. See ya.
Thanks, Jeff.